FunSupermart.com.
India was one of the best performing markets last year. Now in 2015, after the sentiments have settled, how has it done so far? Adrian Lim, Senior Investment Manager of the Asian Equities team at Albany International Fund Managers Limited, shares with us his views. Thank you for coming. The Indian market's top performance last year was mainly built on expectations and optimism for the Modi government. Now 2015 is approaching the end. How do you think the Modi government and the overall economy have performed so far?
You're right. The Modi government has encouraged a lot of financial investors globally to have a look at the Indian story. And part of that success has been due to the fact that Modi is a very strong administrator. He's been in charge had been in charge for the state of Gujarat for more than 10 years. And it's that strong track record that it brings to the government of India. Naturally, India is not just one state, it's many, many states. And it would take more time for him to implement the same levels of success. He's been very focused. He's had some quick successes, but he's had some challenges as well. He's had some quick successes by introducing a more foreign ownership in life insurance. He's been able to streamline some bureaucracy and also to reassure investors that the tax laws that was a legacy from the previous government was simplified and was made fair. But he has also got some challenges. He needs to do more work to make sure that the Land Reform Act is implemented so that it will be easier for government to execute on projects like mining. And he's also got to put together the GST, the value-added tax structure, which will make India a more efficient and productive place to do business in the future. So it's a mixed scorecard. There's been a lot of expectations, so that's why there is some disappointment now. But the macroeconomic indicators are quite strong. GDP has recovered, inflation is under control, and India looks promising.
Modi launched a variety of initiatives like Skill India and Make in India to boost the economy. What do you think about them? How have they achieved what Modi expected?
I think those two programs you talked about are interesting. They focus on the service sector, skills, as well as on the manufacturing sector. And these are important because these are two areas where jobs are more value add than in agriculture. And it needs to be a healthy environment where jobs are not just low value add jobs, they are higher value add jobs. And it provides opportunities for the big hundreds of thousands of graduates that come into the job market every year. But India needs to do more than just this. It needs to invest in public infrastructure. It needs to make sure that its population is upgraded with these schemes. But it also needs to have reform in financial services. It needs to have reform in labor laws. It needs to have reform in land law acquisitions for public goods. And it needs to streamline its tax structure. So those are two things that are important towards helping India modernize and upgrade its economy. But there are many, many things that needs to be done, and the government is looking into those things.
How do you think a slowing economy in China and low energy prices are affecting India? What opportunities do you see?
That's interesting. That's an interesting question. The slowdown or the relative less attraction to the Chinese market and the continued Indian story that has been relatively quiet the last 6 months. I think a lot of people are interested in wondering whether they should be taking money away from China and putting it into India. I think that there are slightly different issues, and a switch may not be an obvious answer. I think the slowing China is something that will take time to resolve. And I think the disappointment has been more severe because the capital markets in China had been doing so well over the last year. So because you have disappointment and because the fundamentals of the economy have not kept up to the expectation, you get a greater disappointment now. China will recover. The regulators, the government is keen to encourage and kickstart the economy again. But these are things that can't be rushed. You have a lot of inventory in certain parts of the country in real estate. You have a lot of capacity in terms of cement manufacturing in certain provinces. So these are things that will take time for a more natural demand to pick up and to create demand for. On the second part of the question with respect to India, India is a key beneficiary of low fuel prices or energy prices. It imports a lot of fuel and energy, and it also subsidizes a lot of the fuel prices to make sure that the man on the street or the most businesses aren't shocked by the rising prices. So when you have lower prices, the government doesn't need to pay more for the subsidies, and so it's a good thing for the country. This encourages a lower cost of production, of logistics, of transportation. But in India, which are in the early stages of recovery, it's not the cost structure that's holding India back. It just needs to have a natural rate of recovery, and these lower cost environment in India will be beneficial, but it won't be the main driver of economic recovery in the country.
What sectors or industries in India do you favor for next year? What do you not favor?
Yeah, some sectors that we are more interested in India include software engineering and the banking and financial sectors. We like the banking and financial services sector because we can find some banks that are really well run, in spite of the fact that the credit environment in India is quite mixed. There are some pockets of stress, there are some pockets of bad loans, but we can identify and invest in banks that are relatively insulated against those pockets of trouble, and they are well capitalized and they have good management teams. So I would put quite a bit of the capital into Indian banks. The second sector is in software engineering, where India has got some pretty good companies. We like Infosys, we like Tata Consultancy. These are companies that do a lot of business in Western Europe as well as in North America. They've got strong teams of engineers, software engineers, and they have a very good track record of delivering their projects on time and on budget. So these are two areas of the country that we think have good businesses that are attractive. In terms of places that we don't like or we are a bit more worried about in India, we are a bit more worried about the energy space or the commodity space in India. Some of the challenges are because it's an environment that's often quite heavily regulated by the government, and there's a lot of red tape and bureaucracy. So it's not run as efficiently as we would like. In the commodity space, you also have a lot of price volatility, which makes it quite difficult for investors to predict the forecast going forward for some of these companies. So at this moment, those are two areas that we would avoid.